The secret of success is to do the common things uncommonly well. John D. Rockefeller. And Mr. Rockefeller of Standard Oil, the billionaire, one of the billionaires of his day, is hitting the nail right on the head. Doing the common things uncommonly well. And folks, that's what we talk about and practice here every day are the common things. That is following these stock charts, looking for trends and following them. Anyone who tells you they did not see what has hit us over the last few weeks coming didn't read a stock chart very well, my friends, because when we look at the weekly vertical crossover that occurred ending the week, the week ending Friday, the 28th of February. It was a big red down candle followed by 4 big red down candles. This week we have plumbed even lower. We have a green down candle right now. That is actually, the reason I call it that is a solid green candle. It means a slowdown in the down movement. We can see that the price percent oscillator is still gaining a little bit energy. Price percent oscillator still heading down quite strongly. Derivative oscillator slowing down a little in gaining that momentum. Price is right there around, it's above the 2-day, just below the weekly trend line. We go from the 2-day chart, the weekly to the 2-day chart. We see on that 2-day chart how over the course of these last 2 days, this candle is drawn out, represents Wednesday and Thursday. Well, the Monday-Tuesday candle has been pushed through. The 2-day trend line has been broken, and we have a green open box up candle movement. It is trying to gain back some of the losses. And again, what have we talked about over and over since this started occurring? The potential, well, not the potential, a bull trap always takes place. That's where the market looks like it's recovering. Everyone says, hey, it's okay. We're going to gain everything we lost back. Sucks all the bulls in, only to pound them even harder than before. Watch our Corona investing. I'll again put that in I'll put it at the end of the video again today so you can see it. Oh, and we have a special training video for you today, as we always do. I think that you will find it helpful. We just finished the 3-part series on options so that everyone can learn what options are all about and how to trade them. And again, practice trading. We're not a stock calling service. We're an education firm. Seek consistency and reliability, not complexity and quantity. That is the training we have for you today. If you're not a subscriber, you won't get that training. How do you become one? Go to chartingwealth.com, sign up. Now, for free, we now see that we have a green up candle. So that is slowing down all of this massive down movement. It's a sizable up candle. Let's look at how that looks. And we see the price percent oscillator heading up, still negative. Derivative oscillator peaked actually back on the 16th. So that was let's see what have been the 13th and the 16th. So we see that that's when what we call our leading indicator, which is the triple smooth version of the RSI, Constance Brown created the derivative oscillator. We use it as our leading indicator, as opposed to the price percent oscillator, which is our lagging indicator. You want to know more about that by our book, Charting Your Way to Wealth, available in the show notes. Now look at these latest candles. We have 3 days of strong, all green up activity. Our chart showed that crossing over in the morning on Tuesday the 24th, and of course soon thereafter, up in the afternoon on Tuesday, morning, afternoon on Wednesday, morning and afternoon on Thursday. Blew through the 2-day trend line at the end of the day on Tuesday, and then continued up through there, still below the weekly trend line, hasn't pushed up to the Bollinger Bands just yet. We see that derivative oscillator gaining lots of upward momentum. We'll continue to watch, pay attention, see how long and how far this goes. Remember, the power in the market is still with the weekly chart. All things being equal, market tends to move in the direction of the largest chart. As we always say, that of course is the weekly, and that is still heading down, as is the 2-day. Those price percent oscillators and derivative oscillators still quite negative. So we'll see if things roll back over. If they do, my friends, and that 4-hour chart crosses over going down, guess who's going to be leading the charge into that? We're going to definitely practice trade it. Now, let's go to QQQ, which is the Nasdaq 100, the tech stocks. We see a green open box candle, long wick on the bottom again, hitting a lower low this week. You would have forgotten that, wouldn't you? That happened on Monday, but since then, market's been heading up. And we see the derivative oscillator, it's still gaining downward momentum. Price percent oscillator's lost some of its plumbing of the depths. It's pulled back a little bit, still very negative. 2-day chart is heading up on the price percent oscillator, derivative oscillator losing momentum. We have a green open box candle there too, having blown through actually 4 days ago. The 2-day trend line still below the weekly trend line. Look at it sitting right there on the 200 period moving average. Will that do anything at all? Don't know that it will. It's interesting it stopped there, isn't it? So keep an eye on that. Put that in your show notes to pay attention to. Now we're going to go to the 4-hour chart, and again we see 3 days of green open box candle up movement, moving through the 2-day trend line and below the weekly trend line. We'll keep an eye on things. That weekly trend line and the 50 period moving average on the 4-hour chart is right there together. And we'll just continue to watch, see what there is to see, what there is to learn, and if indeed this is going to continue and the bull trap continue to be set, we'll see how long that rolls. It could, hey, I told you guys, it could roll on to where a third, a half, 3/4 of the money people lost is gained back, only to roll back over and crush again. So we'll see. If you think we're out of the woods on this coronavirus, you are out of your mind. Now, let's keep going. We're going to go to 20-year bonds, up for the day 0.49%. And as we look, we can see that the weekly chart's still in a confirmed up move, moving up nicely on the price percent oscillator, derivative oscillator losing momentum. What do we have so far for the week on that weekly chart? We've got a green spinning top, a little bit of a wick on the bottom, large wick on top, pushing through the Bollinger Band, the wick, not the candle body. Candle body's a little bigger than last week's, but nowhere near hitting the heights, 179.70 back on the week ending the 13th of March. So far this week, 166.69. So we go from the weekly chart to the 2-day chart. Remember, always go in that order, biggest chart to smallest chart. If you don't do that, folks, here's a reason why. You don't know what the big wave is, and you can get confused. The smaller the wave, the least likely the market is to continue in that direction if it's opposed to the weekly, the big weekly chart for a long time. So you don't want to get whipsawed. So what do we see going on TLT? We have an up candle forming, trying to see how much, is it going to move for me? There we go. Try to see, it reached a high of 166.69. And of course, we look at this latest one, 166.68. So again, 1 penny shy of being a higher high. Price percent oscillator nonetheless is going up. Derivative oscillator, check it out, still negative and increasing downward momentum. That's important to watch and pay attention to. Now we go to the 4-hour chart. What do we see there? We see that the 4-hour chart's really just showing us a sideways slide, weakening on the price percent oscillator, derivative oscillator losing momentum. So what's happening? Just not going up any higher than the high we've seen it hit back on Monday at 166.69, and it's just sort of sliding sideways. That could be consolidating to move up again, or could just be petering out. We'll wait and see. Maybe it's waiting for stocks to go down so it can rally. We'll see. We'll wait. We'll let the market show us. Now, we're going to go from bonds, lastly, to gold. Gold up for the day, which is nice to see, 1.28%. Remember, we had that weekly vertical crossover going down and then a tremendous opportunity for you to clean up on down moves in gold with maybe some puts. And what have we seen happen? Boom, just move down. Hope you practice traded that, or at least got out of your practice trade gold position, hitting a low of 136.12. And of course, recovering a good bit of that. We see that the last reported 148.48. We have a green open box with a wick on the bottom and a long, long wick on the top. Derivative oscillator still gaining downward momentum, but that price percent oscillator's heading up. That's our weekly chart. So we're still negative on the weekly. 2 days also negative, but moving up too on the price percent oscillator. And we have our second up candle. But again, this latest candle didn't hit a higher high than the prior candle. The candle body's bigger, but not hitting a higher high. We want to see higher highs. Derivative oscillators losing downward momentum. Lastly, we go to the 4-hour chart. It crossed over going up in the morning on Monday, popped up big time on Tuesday, and then has sort of been sliding sideways, going up some on Wednesday, and Wednesday sideways down, and then Thursday up in the morning, and sort of retracing a little bit of that slowing down in the afternoon. Derivative oscillators positive, but losing momentum. Price percent oscillator heading up. What are we waiting for on gold? Got to have the 2-day and the weekly cross. When those cross, it will give us an opportunity when that happens to potentially jump into an up trade on gold, or if this 4-hour chart rotates over and hammers down, of course, that'll give you an opportunity to go short on gold. Practice that. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. Getting all those books you guys are ordering out to you. Appreciate the Patreon support. If you appreciate what we do, show us a little love. Follow that link in the show notes to Patreon. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.